Maybe you bought your first investment property, or maybe you're onto your fifth investment property. The question is, how do you know when to invest in that next property? I'm here with Joanne Danckwardt of One Agency JD Property Agents. And Joanne, how do you know when to, acquire your next investment property?
That's a really, really good question, because there's lots of facets to it, So one of the things you really need to know is how much equity that you have. So it's a very important thing to be looking at. If it's your principal place of residence and you bought it a while ago, your loan repayments are going to be at X, but the property might be worth Y. For example, the home might be worth $1 million and you have $500,000 on the mortgage still. That means that you have like $500,000 of equity in your home, which then you can utilise, depending on the bank's lending, you could utilise some of that to purchase another property. So that's something to think about, is your equity. Equity is really important, and it's the same if it's your principal place of residence or another investment that you have. So it's the difference between what it's worth now and what you actually owe. The best way to find out about that too is to talk to an expert, so talk to a lender or a property professional who'd be able to tell you what the values are of the properties that you currently have, and how much money you'd be able to borrow. So another thing that you've got to really have is a clear financial plan. Very, very clear financial plan. You have to know your financial limits. You have to know and include, how much you're prepared to have as borrowings. What do you feel comfortable with? You have to anticipate what your rental income will be and what the ongoing expenses are going to be from having those investment properties. You've got to do some projections on your cash flow. You don't really want to have every single dollar that you have going towards your mortgages and then you don't have any lifestyle at all. And you need to look at risk. Manage the risk as well. Be prepared for unexpected expenses too. So there's lots of things you've got to take into consideration there. Property conditions. Are they right for investing? So when the property is moving forward, like the property market's moving forward and prices are increasing, that can be a good time to get into the market, because you hopefully will buy at the right time and they'll continue to increase, and so you're getting equity fairly quickly. But be aware that markets fluctuate. They don't stay the same, they move all the time. So you have to be really careful, because if it's going down, it's probably not the best time to buy. However, if you buy it at the right level when it's down and you're prepared to hold on to it for a long time, that could be a great strategy. So you have to look at rental demand trends. You have to see whether people are looking to rent properties. There's no point in buying a property as an investment and then not able to find a tenant to move in and help pay the mortgage for you. So that's really important. And interest rates and where they're trending, what's happening with the interest rates. And that's a really hard one to predict. A lot of people think they know, and I always hear people's opinions on what's going to happen with the interest rate, but they will make up their own mind. And you're not going to be able to influence that, and so you just need to have a basic understanding of where you think it might be going. Long-term strategy for portfolio growth, that's really, really important. Most successful property investors develop a long-term strategy. That's what it's about, really. It's all about the long term. If you're thinking of doing things short term, I'd say move to some other form of investment. You really want to look at property as a long-term investment. You have to be clear about what property type you're looking for. That's another complexity in itself as well. Apartments versus houses. And also what your exit strategy is at the end of the day. Yes. So you can build up this big portfolio, but then what's your exit strategy? So, are you thinking you're going to hold on to the properties long term? When do you think you'll be looking to sell, and what your capital gains cost is going to be? So there's a lot of things, there's a lot of things that come into it. I was only talking to an investor recently, actually yesterday, and he was telling me that he only made $60,000. He only had the property for three years though, and that's what I had to remind him. He bought it at a good price. He renovated it. Only cost $30,000 to renovate, and then he sold it, just after he'd completed the renovation, and he'd had the property for 3 years. 3 years is pretty quick turnaround for property. You don't normally turn them around that quick, but he did make $60,000 out of that. After he took away all the costs, because there's a lot of costs involved, so you have to be aware of what they are.
Exactly. No, very good. Look, if you've got any questions and you're trying to navigate investment properties, please get in contact with Joanne here at One Agency JD Property Agents. Thank you so much for watching the video, and we'll see you in the next video.